This is a trade that I took on AUDUSD last week, and this is exactly how I found it. Hello and welcome to the channel. My name is James. I am a currency trader with 6 years of experience in the market, and today I'm going to be sharing with you an AUDUSD buy position that I took last week. I'm going to be breaking this down from start to finish, showing you how I found it, how I managed it, how I executed it, and you'll get a look into my technical strategy. And I've got a few more gems to throw in there as well in terms of knowledge to take from this trade. So what we're going to do is head over to the hourly time frame, and I will break this down from start to finish. Before we jump into the video, I wanted to let you know I have a free mini trading course. It's 13 videos teaching you 10 different topics. It's going to show you why you're not winning and how to turn your results around. So when you finish this video, make sure you head over to the description and join that free course there. Now, at the time of finding this trade, the price action looked just like this on the hourly time frame, and the hourly was all that I was really interested in for this position. The reason for that is because I wasn't looking for a trend continuation trade. I was looking for a pullback trade, counter trend trade, you may call it, to trade through the smaller price action here towards the top of this previous leg of movement. So in order to get any idea of what the trade is doing, first of all, we need to look at the market structure. Now, as you can see, I've just plotted on some of these levels here, and what these indicate are breaks of structure. If we look at the trend direction, we can see from this point it was up. We had these higher highs and higher lows forming all the way up to this point. Then from this point, we stumbled a bit and we broke down and we made a lower low. We pulled back, we made a lower high at this area, and then we pulled down and once again made a lower low. So what this actually shows us is that the market is changing direction from up to down. Now, this may obviously only be an intermediary move, a short-term move, but regardless, when this happens, we generally see price pull all the way back through the imbalanced impulse move. So we have two types of move in a trend. We have an impulse and a correction. An impulse is the major move with the trend. A correction is the pullback through the trending movements. What we very often see is an impulse leave an imbalance in price, and then the correction pulls all the way through the imbalance, retests a supply or demand zone, and then continues on. And as you can see, that's exactly what happened here. We had this impulse that left this imbalanced open price area here. We had this pullback, which pulled slowly all the way through, traded into this supply at the top, and then sold off. So what I would be looking for now is generally a movement similar to that. Now, obviously the reasons why we buy here go a little bit deeper, but we're going to get into that in a moment. But the general premise for my trade is that I will be targeting back into this imbalanced area up here in the high. So we can see, what do we have here? We have a supply zone followed by a bearish impulse move, which has left open this imbalanced price area. So my idea here is that generally price is going to pull through into this area before either selling off or continuing to the upside, but whichever one of those it does not matter to us because we finished our trade by this point and we've took our profitable position off the table. So that's the general idea for the trade, but obviously until we have some confirmation and some agreement with the structure, there is going to be no position taken. Now, this is where we actually incorporate some of these other price areas and look at the substructure. So the focus area of price action for our movement is going to be this high and this low. Now, if we break down the structure between these two levels, we can actually see that after forming a bunch of lower lows and lower highs, we've actually formed this lower low. Then we pushed up, stumbled here, made this higher low, not confirmed yet, but then this break of structure has actually showed us that we are now shifting bullish. So the idea here would be that generally we can probably follow a bit of an uptrend up towards this level, and then we may get a shift down again, of which we would then look to sell into. So that's the general idea behind this trade. Now, one other big confluence factor is that we'd actually traded into a refined demand zone around this level here. So if we go down to, I think, the 30 or 15 minute, you'll see that we have this demand. And as you can see, there is imbalance there. And there's also these small equal lows, which act as liquidity. So equal lows are seen to me as support. And when we see a bunch of equal lows, they are generally going to be taken out and liquidated before the market continues moving in any direction. So we had these small area of equal lows, and below that we had this imbalanced demand zone just here. And as you can see, with this price move down, we traded to the midpoint of this imbalanced demand, then pushed away and then broke structure. So this gives me even more confidence that the market is shifting bullish, at least on this substructure picture, remember, between this and this level. So now we have bullish structure here. We have this magnet area of the imbalanced supply at the top, and we have a demand zone retest, all favoring a buying move. So now I know that I want to buy, but what I need to do now is find reasoning and entry areas to actually buy this pair from. So this is where I start going to the very low time frames. And what I actually went down to here was the 5 and 3 minutes. Now, one thing I always want to do is make sure that I'm buying from the extreme zone. And the extreme zone is going to be the last imbalanced price point in the previous move. So what I will do is actually scour the price action here and find the imbalances and find any inefficiency in the trend to find out where the best area to buy from is. Because obviously when we're looking at a trend like this, there could be multiple demand zones, multiple supply zones. It's hard to know where to buy or sell. But the imbalance gives us a very clear and easy way to find the best buying or selling points, and that is exactly what we're going to do here. So down here on the 3-minute time frame, what I will do is simply look for the demand zones and the pushes away, and then look to see if those demand zones were pulled back and retested. Now here we can see we had this demand, we pushed away, we pulled back, retested, we pushed away again, we pulled back, traded into this area, retested that. Then we had this larger push away, and this would be the demand zone we'd be watching here. What do we see? Push away, consolidation, but then we pull back, liquidate these lows, trade into demand, and then we push away. So this leg of movement is all we need to see now, because all of this is efficient. There's no real reason for price to pull back to these levels before moving higher. So what I'll do is start at the bottom of the move, and we can see we have a demand zone. We pushed away, pulled back, retested, pushed away, formed this demand, pulled back and retested. Once again, at this point, we pushed away, pulled back and retested. And then the final point of which we did that was this demand zone just here. Now, after this, you'll see that we came back, retested this level, and then we pushed away and we did not come back to retest. So this is the final imbalanced area within this trending move. So we can mark the imbalance just so we can keep it there for reference. And if we grab our demand zone tool, we can pull that across from here all the way to where price is now. And what this is going to do is show us that this has now been retested. So this price action is now looking very interesting to me because we've filled this final imbalance point. And in theory now, there is no reason why price should go this low again, unless I was wrong about the position and the trade is invalidated. So what we can now start to do is look for valid reasons to buy. Now we have everything so far in terms of the structure, the inefficiency, the demand zone retest on the higher time frame, and the magnet area on the higher time frame above. And now on the low time frames, the efficiency agrees with us as well, and the trending structure does also agree with us. But we do have one point of conflict on this position, and that is going to be this supply zone just here. So at this point, I hadn't entered long on AUDUSD, but what we had seen was pretty much everything we wanted to see so far, including also this breaker structure within this substructure trend here. But because we have the conflict from this supply, we want to see this supply get pushed for maybe a second time or totally broken in order to execute a move. Now in a prime trade setting, my trade would have been executed from this level. But that brings me to the first lesson of this video, and that is that even if you miss your prime entry, you don't have to miss the whole position. This trade was actually manually executed by me, which is not something I often do, but I will do sometimes if I see a great move and I've missed my prime entry. So the prime entry would have actually been a buy limit from this level with a stop loss just beneath, and that would have pulled us all the way up towards the target and would have given us dramatically better risk reward than what I was looking for on this trade. But regardless, 3R for this position is definitely nice. It's a very nice profit to take on a trade, believe it or not. I know a lot of people's minds are skewed from social media, but 3R is actually a brilliant trade to lock in. So that's lesson number one. Even if you miss the best possible entry, you can still get yourself in on a great trade. So what I wanted to see at this point was the supply zone hit again, because that would show me that the supply zone is not so strong. Strong demand and supply zones generally get one tap and push away, as you can see here, and as you can see in all of these previous ones. So if we do see this pressed a second time with some momentum that takes out this high, that'll show me that this supply is not so strong, and then I can look for a buy on this pair. So shortly after, we saw price push up just like this, and this is actually where I started to get into this trade. So my trade was entered following the momentum, and my stop loss was right under this low because I figured, well, there's no real reason that we should go and trade back into this area again if we are right on the trade. And for the high time frame target, I was looking for this level to be filled, which would have been around 4.1R on my exact trade levels. This might be off by a pip or so because, you know, it was last week now, and I'm not sure what the exact levels were, but I will show you the trade executed in a bit, and I'll show you it sent to my group as well. But now we had the premise for the trade, and we were making a manual execution based on momentum. So now what we do is just sit back and let the trade run because we've entered using some valid criteria. Everything is looking solid from my side, and I'm happy with this trade. And that leads me on to lesson number 2. This trade required great patience because it actually took 23 hours to play out. And what you need to consider is that sometimes the price action is not always going to look beautiful in terms of your trade direction. Now you can see that we got our entry and immediately pulled back to around 60% trade drawdown. When the trade pushed away, we pulled all the way back to break even, and we came and traded around this area for a bit before pushing away. Now even worse still, after pushing 2R into profit, we pulled all the way back down to break even. So what you need to understand is a trade is not always going to run smoothly from A to B. Sometimes it's going to mess around a little bit, and sometimes there's going to be some pullbacks, and you just need to allow the price action to do what it's going to do. Now, why didn't I go break even on this trade when we broke structure? The reason for that is because we still had this demand zone under here that hadn't been retested yet. And if I'd have gone break even here, there's a very, very high chance that this demand zone retest would have taken me out of the trade for zero profit and zero loss. I'm happy with the position. I understand that this is a prime place for my stop, so there's no real reason for me to start cutting the risk on this until we've made some serious moves away. Now, shortly after this, into the next day, I think around 1-2 p.m, we had a big push to the upside, and that actually would have fulfilled my trade, but I closed it a little bit early. Now, why did I close it early? I closed it around this level, and the reason I did that was because of news risk. So that takes me on to lesson number 3. Now, news risk basically refers to any risk associated with news releases, economic news. Basically, there was some US news that came out here, and that is what drove AUDUSD up so fast. And sometimes when we get news releases, we get a big push in the right direction, followed by a very swift move back in the wrong direction. And at this point, when we were trading at 3R, I figured, look, do I want to risk 3R of profit and 1R of risk? So I'm risking 4R to make the final 1R of profit that I could potentially lock in. Do I want to risk 4 to make 1? And generally, I'm going to say no to that, especially when there is news risk involved that could easily sell this market off. So this does not mean you should close every single trade early, but if we have reasons to believe the trade could go sour because of news, then it's definitely worth taking, the 3R profit instead of hoping that the take profit is going to be tapped on this final one. Market experience has showed me many a time that if you don't get out of trades that are running well through news events, you very often get burned and you'll see the whole trade disappear. So that was how I found, managed, and executed this trade on AUDUSD. Now, real quick, here's the trade sent to my members. And here's the trade in my MetaTrader account as well, so you can see that I did actually take it. The moral of this video is you don't always need to go for huge trades. 3R is brilliant. If you can build a strategy that will consistently do 3 to 4R, you're going to do very, very well. Obviously, we can always reach for more, but don't get unrealistic with your targets and make sure you're trading a strategy that can be executed time and time again without difficulty and without having a 5 to 10% win rate, because that's going to stress you out a lot. There were a few little lessons and gems in there for you, and I hope you've taken value from those. I hope this video has been good to you. If it has, please do drop a like and make sure you check out my channel. There's loads of other videos there with hours and hours of further value. So thank you for watching. I hope you've enjoyed it, and I will see you in the next video. If you enjoyed that video, make sure you check this one out as well. There's way more value waiting for you, just one click away.